This is a great turnout. Thanks all for being on here today. I think
Yeah.
everybody's wondering what is going on. What is going on in the market?
Okay, so let's see if this works here. Yes, I have ability to share. This is amazing. Awesome. All right. So let's go to the real estate stats. If I can just move this thing. Here we go. Sorry, I've got all these Zoom buttons up on my screen here. So if I can type, there we go. So just taking a quick look at the numbers, and for those of you who were expecting Brett, he is at Fall Masterminds rather in Boston. So Jeffrey and I are taking over for him for the day, and we're just going to run through these numbers pretty quickly. Um, so for Fulton County, we are back here. So on the week of the 3rd, we've got 787 active, 100 active under contract, 24 coming soons, pending 282. And then if you look at the expireds, it's going way up.
Man,
So that's the one thing that sort of jumped out to me on this first set of numbers. Anything else jumping out at you, Jeffrey?
no, but if I see 128 expireds, what should I be doing? That's just Fulton County.
Yeah, that's just Fulton County. So there's a couple of things you can do. One is make sure your clients aren't one of them. So price your properties right in the first place. But secondly, you can reach out to expired sellers and talk to them about what the experience would look like if you went in with a solid strategy, a solid pricing plan, and could keep them from having that experience again and get their house sold.
Yep. And it's probably a safe assumption, Mark, that we could probably say 95% of those were overpriced
Yes,
and sat
absolutely.
there. Um,
I saw something the other week that said sellers are 6 months behind where things are in the market, and buyers are 6 months ahead. So buyers think it's already a full-on buyer's market, and they're expecting, no competition and all the uh, benefits of being in a buyer's market, concessions and that kind of thing. Sellers still think it's 6 months ago, and people should be fighting over their property, and they're going to
exactly.
give you offers in 2 days, and neither is
Exactly.
the truth, right?
I mean, this is helpful too to sit down when you're going on listing presentations. But pull this out, use it. I mean, it's free to all of us to access, but if it helps
Absolutely.
give your seller a dose of reality, it's worth it.
Absolutely. So looking at Dekalb, similar in that the expireds are up compared to normal. If you look last month, they were also around 40 at the end of the month. The month before that, 35. But the trends are pretty similar. The actives are slightly ticking up, but pretty steady. Active under contract, about the same. Coming soons, a little fewer coming soons. Pendings, a little fewer pendings than past months. So things are taking longer to go under contract. So I think we're just going to see that, right?
Yep.
So then, so we'll go through Cobb and Gwinnett here real quick. Let's see,
Scroll over
Cobb,
a
we've
little
got,
bit. Scroll over.
what's that?
Scroll over a hair to. There we
There we
go.
go. Got it. 524, 60, 17 coming soons, 190 pendings. So that's slightly down from previous months. The past couple of weeks have been slightly down. Holds 22, 47 withdrawn, and 61 expired. So
I
again, your
mean,
expireds at the end of the month, every month, are ticking up from August. They were, or July, end of July, beginning of August was 36 and 33. And then you're at 60 in September and
yep.
61 in October. So
I mean,
it looks like
years
the
ago,
expireds are more of a real thing now.
I would time block years ago, the first day of every month, following up on expireds, and I'd also like usually the last day of the month, I would go in and watch stuff and what expires tomorrow, so I'm ready to jump on it. That's
Yep,
it was a
absolutely.
great paid the bills.
Absolutely. Well, and in a TCP compliant way, of course.
Yes, absolutely, absolutely.
Awesome. So we'll just look real quick at Gwinnett, sort of the same. 731, we've got 71 withdrawns and 79 expired. So the withdrawns and expireds, you're going to see a lot more of that. And the withdrawns, a lot of that's going to be people pulling it off to reprice it and put it back on the market. But some of it's going to be people that are withdrawing it just because they didn't sell, and they don't want to wait until the listing period is over, right?
I'm curious, Mark, what do you see in terms of terminations right now coming out of your office?
Yeah, we've seen a big uptick in terminations, and my feeling about that, Jeffrey, and let me know what you think. But I feel like it's an expectations gap between what buyers expect and what sellers expect, and it's our job as the agents to sort of help change both of their expectations, right?
Yep. Yeah, that especially when it comes onto that ATAC. Buyers like,
Absolutely.
oh, I'll just get them down when it gets to that point. And it's like, hey, you know what? They may not be in that same mindset,
Right.
but following those back on market statistics as well. Um, Watch those guys. If you're tracking the market, be tracking back on market as well.
Absolutely.
Because it's a fantastic opportunity for you to slide in there with your buyers.
And I always like to just sort of point these four basic graphs out that show up on your homepage at FMLS, wherever you may have the widget, it's somewhere on your homepage. But these are really great, easy to understand slides for sellers to understand and for buyers. So just looking at median sales price, you can see it's gone down consistently, right, over the past 3 months, 4 months. Days on market, we're now back up to 14 days on market, which, you know, feels really long when we were down at 6 before, but still relatively low. And we'll
Mm-hmm.
look at that in a second. Sales, closed sales, again, they're kind of falling down. We're down to around 6,000, where at the peak in June 2021, we were almost double that, right? So it's definitely gone down. And then supply. Supply is increasing. We're up to a whopping 2.3 months. So not exactly a seller's or a buyer's market yet, is it?
No, but I mean, it depends on your skill set, on whose market it is, honestly, right now, because the buyers are winning sometimes.
Absolutely.
So I had somebody ask me the other day, because I try to bring up real estate statistics as much as I can in conversations because I'm that guy. Um,
Uh-huh.
but they were like, well, who do you believe news wise and which news outlet? And they're saying this. And I'm like, hang on, let me pull up FMLS because these numbers don't lie. This is not opinions.
Right.
This is actual recorded data and information. So you take what you hear on the news, whatever your trusted source is, and compare it to the actual numbers.
Right. I actually heard someone say, there's a non-real estate person say, I heard things are taking forever to sell. So that's where I would pull out a slide like this and say, well, forever is relative. And, when you're looking at days on or cumulative days on market, the average is, in city of Atlanta right now is 31. Across the entire FMLS area, it's 28. That's cumulative, which means it includes if they were listed and pulled it off the market and relisted, right? Or it expired and they relisted. But look at it compared to historic from 2009 on. We're still
Wow.
really low. That number of days on market is still really, really low historically. And I
Very
think that's
low,
the perspective we
actually.
have to remind people of.
Yep. Yep. This is good data, Mark. This is good info to carry with us.
Absolutely. I love InfoSparks because it's such easy data to grab. You just come down here and pick whatever you want, close sales, and you get to see that there's seasonality always. And if you look at the very bottom of any of these years, that's January. You see a steady decline from June or July at the top down to January. And it's just consistently like that. That's what happens. And then it peaks in December, November, December typically, because people want to close by the end of the year. It's way down in January, and then it slowly
Well,
climbs until we get back to the summer, the peak of the summer market in June.
so if
So
I'm a new agent, Mark, should this encourage me or discourage me?
this should encourage you, and here's why. For me, this is showing that we're right now we're in the downswing of seasonality. That happens every single year. Even during the pandemic, it happened. It just didn't happen exactly when it's happened in the past years, right? But if you look at 2018, let's see, where are we? September. So September was around seventh. Let's see, Greater Atlanta, 6,037 homes, and we look at September, 4,142. So still lower, but not drastic.
Yep.
right? So, and that's across the entire FMLS area. So, it should be encouraging that we're still in the same kind of range we've been in, and way higher than we were in the early part of this 2009, 2010, you know, post crash.
Yeah. That's, I mean, for me, it's encouraging because all I hear right now is interest rates, interest rates, interest rates.
Mm-hmm.
But when you pull it up and look, there's still homes closing.
Yep.
There's
And
still properties coming new on the market every month, and there's still transactions to be made and clients to win.
absolutely. And our buyers actually have more of a shot now because there is more inventory.
Yep.
Um, but again, for perspective on that, this is a slide I would show to buyers, showing them that the month supply, while yes, we're up to 2.3 months in supply, nowhere near where it was pre-pandemic, right? Like way higher pre-pandemic. So having some perspective on this is important when you're talking to your clients, so that they can put that, whether it's the interest rates not being in the twos and threes, or supply being at 2.3 months, those numbers in a vacuum don't mean anything unless you have context and perspective, right?
That's great. That's great.
And which leads me to my one more slide I want to show y'all. Let's see if I can share my other screen. So give me a sec.
Got a hand up.
Oh,
Oh,
yep.
hand up. Go
Hey,
for it, Amy.
thanks. Just a question about seasonality. I'm talking to a couple of sellers who I've been telling them, sooner is better than later, but they just because of rising rates, but they also understand seasonality. And so they're like, well, we want to wait until spring. So what would you say to, I mean, spring is a long way off. We're in early October.
Yeah, I think that's a great point. So, and Jeffrey, you share what you want to share too. But my thought would be, I always tell people when they want to wait, that we don't know. The best market we know is right now, because we have all the data for what's happening right now. We don't know what's going to happen in the spring, and with the Fed scheduled to increase the Fed rate over the next several times they meet, we can't predict what rates are going to do, but there's a good chance they're going to go up before they go down.
Yep.
Okay.
And we can't time that. So the best thing we can do is act on the information we have today, and also look back at motivation, like what's really important to them in moving.
Okay. All right. Thanks.
Jeffrey?
I don't like the phrase, and I think Gary said it, doesn't like it as well, but date the rate, marry the house, that kind of thing. But it really is like, okay, what is more important to you?
Right.
Getting into that school district, getting into that new house, versus the dollar amount. I mean, the one thing we know for certain is rates will go up and then rates will go down.
Absolutely.
So we know that for certain. I'm always, gosh, I have more people sitting around going, gosh, I wish I had bought then in my
Yep.
pipeline than I have anybody saying, oh, I'm so glad we waited to buy.
And you have to line up when you're mentally ready, when you're financially ready, when the rates are ideal, when the sellers are the most willing to negotiate on price, and when the house you want to buy is available. That's a lot of things to try to line up that are all arbitrary numbers. So it's a
Yep.
really tough thing to time.
Yep. I carry the weight sometimes of feeling, and I know we shouldn't do this in our role, but making sure people are making a wise decision. I find value in myself to make sure that, gosh, I hope all my clients are getting a great deal, and I hope my sellers are getting the max amount of money. But that's not always on us to carry.
Right.
It's not. It's their decision that we guide and inform based on these statistics. So
Mhm.
that doesn't help answer your question, but I hope it empowers you to feel like it's not on you to tell them what to do, when to do it. Let the numbers
Yeah.
guide you.
Just help them make a good decision, and then whatever's best for them. And again, if you go back to motivation, they might be fine waiting, but to go back to why they're wanting to move in the first place, because if it's gosh, I'm this rental property is sitting vacant and I'm losing money every month, that's one thing, because then it's like, yeah, for if you hold on to it for another 4 or 5 months, you're going to be further in the hole. If it's just we think we want to move, but we're not in a hurry, it might be better for them to wait. right? So it's really about taking care of them and making sure they make good decisions for them.
Okay. Yeah, I think my takeaway is the best time to list it is when you're ready.
Yep. And the further in the future you go, the more risk there is that things won't be what you think they are going to be.
Okay.
Because, going further from today, we don't know what tomorrow brings.
Okay.
I threw this rate slide up here. This is from Gary Keller's mastermind that I attended last week. And it just sort of, some people have probably seen this before. Slide hasn't really changed, but it's just a reminder that the 30-year historical average is right up under 6%, but the 50-year historical average is 7.81. So compared to both of those, we're still doing okay, right? 6% isn't the end of the world, and it's, again, context. When I bought my first property, it was at 7%, and I remember being thrilled to get 7%. And that was in 96, I think. So
Yeah, it feels weird to me looking back at averages based back into the 70s, and comparing that, but it's statistical data. It's data.
right. Well,
And
and
it's
have
trackable.
people that bought at any of these other times made money on their real estate if they held it long enough? Yes. Like you can make money on real estate no matter how much how much the rate is, how high the rate is when you buy it, depending on how long you're going to hold it.
Yep.
So it becomes a personal consulting decision about how long, what's their holding window, right? And what Gary says is if you're going to hold a property for 7 to 10 years, then the rate doesn't really matter because it's been proven that over that 7 to 10 year period, you're going to be in a better situation 7 to 10 years from now than you were when you started.
So this is a little, market update and wealth building. So thank you, Mark.
Hey, there you go. Perfect. All right, we're going to share that article that you and I talked about a little bit earlier.
Hi, Jeffrey. I'm Natalie Tullock at the Buckhead office. Um, I'm sorry, who was talking? Was it Jeffrey or Mark? Sorry.
Both of us on top of each other.
Thank
Go
you.
on.
So I've heard the term that if you're going to be in the house 7 years or more, then it doesn't really matter. Can you elaborate that? Because I can repeat it, but I don't quite understand enough to explain it to a client to make sure that I just don't know how to explain it to make sure it comes across.
Yeah.
Mark, I'll let you take it.
Yeah, let me go back to a
Thank
slide
you.
there to show that. So there's a values slide, so let me get to that and then I'll share it.
It's a great question. And I appreciate the fact that you're trying to master this industry.
Thank you.
For sure. Well, and being able to, say something with conviction, you want to understand it, right?
Yep.
Exactly. Thank you.
So the example Gary uses is that, the 08, 09, sort of the crash, if you will, the Great Recession, the second worst in our recorded history, the worst in our lifetime. When you look at how long it took for prices to recover to where they were. So if you look at this, 08, how long did it take for prices to get back to where that was?
6 years, 7 years?
Yeah, it was about 6 years to get back there. If you started here in 06 when people were at the top of the market, it took 9 years to get, I think it's this one here that's slightly over in 2016. So if you're going to be within that 7 to 10 year window, if you hold it long enough within that 7 to 10 year window, the market, the way prices go up and down, it's generally going to be long enough that somewhere within that 7 to 10 year window, prices will come back up, even if they fall.
Yep.
And they're not necessarily going to fall right now. They're just not appreciating as rapidly. Did that help, Natalie?
Yes. I can repeat that and understand it.
Yeah.
Or I felt like I would have been regurgitating.
Yeah, no, that's perfect.
And use this slide. Use this. Pull the, what I'm saying? Let this speak for you.
I will. Where are these slides housed?
You're in Buckhead, you said?
I am.
Okay, I'll have Kelly post it for you.
Thank you.
Yeah,
Yeah.
I'll email it to all the team leaders to make sure they have it.
Thank you.
So perfect. All right, cool. Let me stop sharing that. Go back to this article. So Jeffrey, do you want to talk a little bit about this article that you and I were chatting about earlier?
Yeah. It was that we were talking
Stymied?
about the on Inman, correct?
Yep.
Yeah. So looking at what we're seeing right now, are we in a housing recession? Everybody is bases that term and that phrase of housing recession on the 2008, 2009 crisis. And that, yes, had a lot to do with housing, but there was a lot of different factors in play that brought us to where we ended up in the housing market. So if you look at it, our days on market, our inventory numbers are extremely different than what we were looking at going into the recession of 08, 09, what we're looking at. And, for the most part, economists and everybody all throughout this article and that you find on Inman is saying, I mean, obviously things are changing and things have changed and they'll continue to change. But is it going to tank? And I think that's what everybody's mindset is it's either going to be like up through the roof or it's going to be bottomed out. And all this is saying that we're not really in either of those right now. We're, yes, things are cooling down, but it's not a tank. It's not. And it's based on supply. There's just not as much supply as there is demand right now. There's way more demand than there is supply. Now,
Right.
January, something drastic happens. I mean, we went through a global pandemic and now there's a war happening in Europe.
Yeah.
And this is where we're at.
Right.
So
Yeah. I mean,
catastrophic.
if a nuclear war breaks out, all bets are off, right? Like we don't know what that would do. So all we can do is base it on what we know.
And Mark, for the longest time, I would look at these things and I never really understood the impact that supply had on the housing market.
Mm-hmm.
Um, and it makes a big deal. That 2.6 months of inventory that we have currently is still not a lot of inventory
Right.
in comparison to what's out there. And
There's,
in comparison, and I know it's a different article, but the amount of people whose homes are actually paid off right now, I think I saw it was like 36% of all mortgages are actually paid off.
mm-hmm. Yeah, and
Um,
there's a number in here. In fact, I'll go to that, and then we'll work our way back up. This shows, it said in the second quarter of this year, over 48% of homeowners with a mortgage were sitting on more than 50% equity.
yeah.
And if you look at Georgia, that number is right at 49.5%.
And that's
So
so different than where we were at 12, 15,
absolutely.
13 years ago.
No one had any equity because had all paid these inflated prices for things, and there was not enough demand to buy things back at those same prices.
Yep.
Yep. So
Yep. This stuff it fascinates me. Because I hear it all the time in the office. And people are just talking from what they hear and not talking based on data.
yeah. Well, this article is, and there's a video in this article that if you have Inman, if you don't have a subscription, I would highly recommend it. There's some great stuff. But there's a video that goes with this, where this economist from Windermere, which is a California real estate company, is walking through these stats, and it's really, really good. But one of these slides, this article sort of posts some of the slides that he uses, and this one I just love. This 4 to 6 month middle section here is where we consider it a balanced market, and below that, if there's less than 4 months supply, it's considered a seller's market, and then if it's above 6 months, it's a buyer's market. So that 4 to 6 month supply is sort of the balanced range. Um, and of course, every market's different, and real estate's hyper local. I think in Atlanta we tend to use more of a 6 month figure as more of a balanced market because we're a growing city with a lot of people moving to it. But if you look at where we are, we're still nowhere near that 4 to 6 month inventory. So we're still on the very low end of where inventory has been since 2000. So until that inventory is a little bit more balanced with the amount of demand out there, we're going to continue to see prices hold on to value a lot stronger than than they did during the recession.
And looking at that graph right there, Mark, like I have zero medical knowledge in my background at all. But I know if I'm looking at like an EKG, those spikes are drastic in 08, 09.
Yeah.
Everything else, it's just kind of now, I mean, it's going down, but it's not drastic.
Right.
So we just need to keep our eye on those drastic drops or those drastic rises. That's when it's like, oh no, what's happened?
Right. Natalie, you had a question?
I do. As far as the ones that where they looked at the people that had all the equity, is this a number that's different from all the people that refinanced and cashed out? Is that a completely separate number?
Yeah, this is sort of talking about based on the mortgage that they currently have. More than 50% of the people, I'm sorry, over 48% of the people had more than 50% equity in their home.
So yeah, if they refied and did all that, and
even if they've refinanced it, there's still more than 50% equity.
That's awesome.
Which is pretty amazing. That's a lot of money. When you think about the average home, even if you look at like sort of across the nation like this, you're looking at an average home price of around 300,000. That means the average, over 48% of homeowners have $150,000 in equity in their home. That's a lot.
A lot of money.
It's a lot.
I know. I mean, I don't know if any of y'all are like me that you get the CD from the attorney and you're looking at the numbers on the other side of the seller and you're like, what? What? Yep. I didn't see that coming.
Yeah, how much money they're getting. Bought in 2012 through, or actually 2008 through 2012 is probably doing really, really well right now. And even if they bought up through 2020, you probably still have equity because in the past 2 years, there's been such a huge increase. So,
and most likely they've refied.
Yeah, refi, lower interest rate, tapped into the equity. Maybe they have an equity line in. So yeah, there's a lot of cash available out there. Yep. This slide, he talked a little bit about foreclosures and why he doesn't see it being a big thing. And this is just comparing it to 2017 is where this graph starts. He talks about the number of foreclosures while slightly going up as people come out of their forbearance. There's just not enough for it to create any sort of oversupply in the market like happened after the Great Recession started, where person after person was being foreclosed on because they just didn't have any equity, they didn't have any money, and they couldn't sell their home. So right today we have people have equity in their homes. If they wanted to sell it, they could because there's so little inventory that the demand is still high compared to the inventory. So you're just not going to see a glut of foreclosures and short sales like you did back then. And then one other chart I thought was interesting was this one. This is just a bunch of different institutions guessing at what rates are going to be in 2023, right? And the highest one, NAR, guesses they're going to be somewhere around 6%. Everyone else seems to think they're going to be settling somewhere around 5.25% or less. So it'll be interesting to see where that goes, but it just sort of shows you that even the experts can't agree on where this is going to go. Any thoughts on that, Jeffrey? Oh, I think he had to take off. Any questions about that? Terry, you had a question?
Hi, Mark. Yes, this is a great article to share, and I'm right now struggling a little bit with some folks that I have that want to downsize and move up, and are saying, well, we want to wait and see what happens with the market. And I think, there's a lot of national news about, the sky is falling and all that stuff. So do we have anything similar to this to distinguish the Atlanta market, which is much stronger than this overall national average business, that we could share with our sellers and buyers to instill confidence and show them, prices are not crashing. In fact, they're still going up strongly in Atlanta. Maybe not, maybe there are longer days on market and we're not going up, at a rate of 20%. However, we have a 5% 50-year average. So if we're at 10, we're still double normal,
Right.
right? So
Yep.
what do you have any tools that you could share with us to combat all of these things in their head and say, well, let me just pull the numbers out and show them to you?
Yeah. Well, I mean, I think this slide here that I just pulled back up on InfoSparks, because InfoSparks is FMLS's statistics, app through showing time. So this is real local data, and it shows, and this is since 2009, how prices have gone up, and you can see how prices they go up and down. But in general, the trend is upward. And right now, they kind of dipped a little bit in August, and now they're starting to head back up a little bit. So there, you can sort of show them that in general, our prices are still high right now, but they're going to keep going up and down. But the general direction is positive. So, but it's impossible to time that until, when is it going to be at the lowest it's going to be in the next year? Who knows? We might have already been there. So you can't, it's really hard to time the market, but you can look at it and see that right now, let's use City of Atlanta, for example. The average sales price was 557,000, and that's in September 22. If you look at September, let's pick a year here, September 2018, it was 393. So prices are still way higher than they've been in the past 5 years. They're just not as high as they were, maybe in the past 6 or 7 months, which was when people were overpaying, way beyond list price for homes.
So you're saying overall, they're still trending up. This is what you say to people who are thinking that prices are going to fall.
Right.
And I have another concern about this. This shows the average sales price. When you say the prices are going up or they're going down, that's an average sales price, but that's just whatever happened to close.
Right.
So people's individual homes are not going down in price
No.
like that.
If they close on something today, there's a good chance it's going to be 15 to 16% higher than it was last year at the same time. If we had
Yes.
taken that same situation 5 months ago, that number was like 20% higher than where it was the year before, right? So
What
it's not
about
growing
going?
as much, but it's still growing.
What about forecast and the famous they who say, what do we have to offer for that?
I'm sorry,
What we're expecting.
what was, I missed that last
What
part of
about
that.
forecasting going forward, for those who are, quote, waiting for prices to drop, unquote? What
Yeah.
do we have to share to say, I don't hear, I don't see
Yeah.
any data saying that prices are going to drop
Right.
in Atlanta.
There really is no data to say that, and honestly, if you listen to all of the, if you read all the articles, they all say that they don't expect a drop in price overall. There might be hyper local markets where that might happen if the properties. I think Austin, Texas, is one that's used as an example because the bidding over ask got so out of hand that people were literally spending hundreds of thousands of dollars over asking price in Austin. So I think there are some areas where you might see a dip in prices, but even that they say is going to be a temporary thing, and that within 2 years they'll see that correcting.
So do we have some articles for our specific market that we can show folks to say, hey, there's no expectation of the bottom falling out and prices
Yeah.
dropping. Here's what's forecast for the future.
I don't have a particular article for Atlanta pulled up, but there are articles. I always pull the Atlanta Business Chronicle because there are some great articles in that
Okay.
um, that talk about the average home price and things like that, and the data that the Atlanta Realtors puts out.
Okay, so
Those
look in the
figures are
Atlanta
really
Business
good.
Chronicle and the Atlanta Realtors. I know I
Mhm.
did see an Atlanta agent article a couple of weeks ago that said Atlanta is one of the top 5 cities for residential real estate investors.
Yep. Exactly. And there's another one that says one of the top cities to live in that just came out, a couple of days ago. So there's a lot of positive news, and we're 305, so we're way over. But there's a lot of positive news out there. What I try to do is just whenever I see something like this, I'll screen capture it, and I'll share it, or I'll put it somewhere where I can get to it quickly. So when I'm having these conversations, I can pull them up and say, "Let me send you this article that I read."
Is there
This
somewhere you could share that for us?
I mean, it's on
Somewhere
my
you could share
desktop,
that for us?
but I can send you some articles. Sure, I can post some articles.
Like that would be great because I
Yeah,
know they're out there and it's great when you happen across them, but they're never there when I need them.
yeah. That's why it's important right now. I think more than ever to be just like really paying attention and reading every day what's going on in the market. Reading the Atlanta Business Chronicle, reading the Inman news. You get email alerts; they send them out all the time. Emails from the Atlanta Realtors Association and GAR, Georgia Association of Realtors, that have data in them are super helpful. This particular slide here that I just stopped this video on shows price and unit sales forecasts for 2022 and 2023. Now, this isn't Atlanta, this is nationally, but it shows that for 2022, they're forecasting 13% by the end of the year, 13% fewer sales than the previous year. And then next year, 0% change, so it'll be about the same number of sales as this year. But look at what prices are doing. So they expect this year to be up 11% over last year, and then next year to be up another 2%.
That's awesome.
So
And have
things
you
like
seen
this, I think, help
anything
people
like that
contextualize
for
that.
Atlanta?
Yeah, it'd be nice if we had more specific data like that. But the Atlanta Business Chronicle does have some of this information. It's just usually not in as helpful a form.
Hey,
Yes.
Terry, check that should be coming out in about 2 weeks.
What's that?
Chart Masters. So we'll
Chart
have
masters are great.
Okay. I found this on the web for check card.
But they don't really forecast in Chartmaster.
No, no, there's no real forecasting.
No, I'm looking for forecasts for people who are saying, well, I'm going to wait till the prices drop in Atlanta. This is what
Yeah.
anyone who has, Mark, if you have anything to share on that, I don't know, can you share it on Facebook or
Yeah, I can share it in
somewhere?
the Heart of
Right,
Atlanta Facebook group.
but Terry, you can also use that to show the upward trend
Yep.
because it's still going to be trending up.
Yes, and I want people that, because they hear all this national news like this Lawrence Young, he's great. I want some economic people on Atlanta, kind of like that article that said we're one of the top 5 investment locations.
Yeah, yeah.
As
The Atlanta Business Chronicle is
much
the best
data
place to
as I
get that
can
info.
have to share with them to combat all these little ghosts that are running around in their head. Right? Okay, awesome. Thank you. This
Absolutely.
was an awesome industry update. I really appreciate it.
Awesome. Cool. Well, thanks for being here, everyone. Sorry we kept you long, but have a great day.